Hi, a very good afternoon, good evening to all of you. So, I think that we have less members today, maybe the vacation time, but still considering the same, we have enough members, I believe, to attend the VAT updates. And let's move on to the first section for today by CA Girish Chand from MCA. A warm welcome to today's section on recent updates on tax procedures. CA Girish Chand, he is heading MCA Gulf compliance, practicing over corporate tax, VAT, ESR, UBO, AML compliances across UAE, Bahrain, Oman, and KSA. He had conducted various compliance seminars over several platforms within India and UAE. He is an expert on VAT, corporate tax, and ESR, on basically advising on large companies, professional bodies, industry groups, and several authorities. Girish ji is a contributor in newspapers and radio talks, and also have delivered several tax topics over his expertise over last 25 years, experience in consulting, finance, and audit executive roles. Over his lifetime, he is well versed in board level dealings, JV structure, and advisory roles for executive management. I heartily welcome Girish ji on stage.
Coming to Abu Dhabi, it must be a 1.5 hour drive. In fact, today I was in Abu Dhabi the whole day. So I was just thinking, this is a session in the evening. Hopefully, I'll find the energy to kind of do this session. But I think when people come at 6:30 to listen to a VAT topic, so obviously I think the person who is speaking, obviously he will find the energy to deliver that. So I think a good round of applause to, despite people saying that there are not enough people, I think there are enough people to listen on VAT after 5 years. So good round of applause to you all. So I think we are saying that it is almost a half a decade that VAT has been there. I think across the room, I'll take the liberty to say that the journey has been very pleasant, okay? Because by far, if you look at it in terms of the interactions with the FTA, largely are on account of only one or two or three major factors, okay? One is if you are going in for a refund, okay, maybe in the recent past might be the if you are going in for an amendment, okay, and there might be the few unfortunate ones who are actually kind of have got a notice for an audit or who have been subjected to an audit, okay. But when you look at generally, right, the journey I would say has been pleasant. Would you agree? If who agrees, maybe raise with a show of hand. Okay, either the rest have not experienced or might be the journey is not pleasant for them. But I would imagine that I think things are going to change, right. So what we are seeing now is that VAT has matured, right, and effectively what I will be talking about today is about the the changes that have been made to the taxation procedures, okay. And again, this is a slightly long drawn, because effectively there is something called a taxation procedures law, right, and which basically governs the the procedures related not just VAT, okay, they cover the excise, and now they will be covering the corporate tax also, right. So effectively the taxation procedures remain the same. So we have had this the procedures law being amended maybe in September of 21 and now recently in October of 22, right. But there was a slight bit of gap, okay, where effectively the law came in October, but the executive regulations have come very recently. Okay. And maybe a lot of the people missed is that effectively the ER which was applicable earlier, that still continued to be applicable, except till the time it was kind of the executive regulations was introduced now, right. So, the old executive regulations was in place as such, right. So, these are the nuances, and in fact, I think for us as chartered accountant, there are some good news in this so called changes that have happened. Okay. Primarily on the front of when we talk about tax agents, how many tax agents in this room, or at least the firms are tax agents? Right. Okay. And this number is likely to change. Let me tell you that in the next 1 year or so, this number will increase, and maybe if we do a session possibly a year or later, I think more hands will go up in this room, and I will tell you why that is going to happen, in case you do not know it already. Okay, so, coming to the presentation. So, largely it is about the background of what the changes have been. Okay, what have been it is a very simple presentation. I think the rest of the guys might be doing a little more elaborate about the practical experiences. This is more about what are the changes in the law, and might be some nuances I will put in each of them based on our experiences so far as such. Right. So, what we are talking is the background in terms of the chronological order of what has changed, right. What are the changes in the tax procedures laws which happened somewhere in October of 2022, and what are the changes that have come about in the recently introduced executive regulations. Yeah, that is the whole theme of this presentation. So, when we talk about this, I think just I will run through that there was the law which was introduced in June 2017, and this was amended in September 2021. Okay. That is the taxation procedures law, right. The executive regulations, this was introduced basically by the cabinet decision 36, and it was amended again by the 51 of 2021. These were all basically in the earlier period, and I think the latest update would have been somewhere around the 2021, the third quarter. Now, this is a new one which was introduced on 30th of September, and the earlier law has been repealed, right. So, this basically is what is referred to as a federal law 28 of 2022. Okay. And we have the ER which has been introduced from 10th of July, and this is where we are seeing some of the changes and what are referred to as positive changes for us also. Okay. So, this is broadly, and then there was and I think one good thing is that now we have a public clarification. Otherwise, earlier what we had to do is that we had to take the old executive regulations, the new executive regulations, do a comparison and possibly come up with what the changes are. Okay. FT has been proactive, and they have also introduced a public clarification document number, the P006, which basically kind of clarified all the major changes which have happened in the executive regulations from the earlier one. So, we will dwell into what is the changes per se. Yeah, one important point is that these changes are effective 1st August 2023, except one change which will be effective from 1st December 2023, right. And this is the one which possibly is an important change for us who are in practice, because it is possibly laying down in terms of what we earlier call as the tax agency, and now it is called the juridical tax person, right. Now, that particular what it refers to is that there are certain requirements which a tax agency needs to have, right, for it to be considered as a tax agency. And there are some changes which we will talk about in detail in terms of what is expected as a tax agency. Again, I will use the word positive, right, but it also places an onus. Earlier we could possibly look at tax agents being just like an outsourced resource. Okay. However, that is likely to change, where you are expected to have it within your setup as such. Okay. So, when we come to the tax procedure law per se, right, the key changes what we refer to, okay, these are small nuances where earlier where there was a credit lying, okay, that was in something which they used to say that it will be, it was not specified, but now FTA could choose in terms of how those excess credits that are lying could be adjusted, and obviously they will use that to adjust towards any past outstandings that are there as far as our outstandings are concerned, whether it is penalty, whether dispute, those kind of stuff. Okay. Now, this was a very innocuous one, where we talk about voluntary disclosure, right. Basically when the law came in, right, there was a section which referred to saying that even if there are no changes in terms of the overall return, right, you would be required to kind of file a VD. Okay. Now, that is something which is that is still there as such. Okay. However, the old conditions, right, there was some maybe different opinions, right. So, that was also led to that even if the the VD was less than 10,000, then also you would require to kind of do it, sorry, the change which was there, if it is less than 10,000 you would be required to do it through a VD. But that was not the case. I think the old executive regulations were still applicable, okay, and you need not do the change per se. Okay. So, that continues as such, and I will talk about little more detail subsequently, but this broadly in the law, what has been brought about to say is that even if there is no change, okay, you are required to do a VD. Now, that will look like a little anomaly where effectively there is a a change which is there and it is less than 10,000, you can do it in the next return, which is available. But however, there is no change, right, but it is related to basically the circumstances are possibly your emirate being reported wrong, okay, or maybe the export what is the zero rated, that kind of being reported wrong. Now, those kind of changes does not have an impact on the return, but the expectation is to do a VD. Sounds a little harsh, but that is what the law states. Yeah, tax agents, I will keep the good news for the later part of the thing, but there is changes related to the registration, the qualification, those elements of it as such as far as the tax agents are concerned. Now, these are some in terms of more procedural, where in terms of when you talk about the kind of the tax audit and assessment, they need to give more time than it was earlier. Earlier it used to be 5 business days, and we have experience wherever the audits are there, the notification should used to come and say that they are expected to give this within 5 business days as such. Obviously, you could go back and possibly ask for more time depending upon what is the extent of information being asked, and FTA in most cases would extend the timeline as such, but formally now it is basically talking about 10 business days. Okay, and the administrative penalties, in short, I think the overall limits, these have been brought down to 2 times as against the what used to be earlier the 3 times as per se. Right now, there is an element of provision where effectively I think in case they kind of presume there is a tax loss or something, they can order in terms of the seizure of basically the assets. So, that is now very clearly defined in the tax procedure law. When you talk about now, there is earlier there used to be a concept of possibility tax evasion. Now, what they refer to as also something which has been introduced is tax crimes. In fact, there is a session by FTA tomorrow, I think, where they talk little more in detail about this particular section about the tax violation and the tax crimes. Okay. So, they have basically divided those sections into evasions and the others, and again the penalties have been specified in terms of possibly the 3 times and 1 million depending upon the type of basically the violation that you take place as such. I think this is the one of the important parts where the statute of limitations. How many have received a notice in the last quarter of 2022 for audits? Not many. So, the journey has been pleasant, right. So, yeah. So, this is the section where effectively the statute of limitation got extended, where when it was actually what was happening is that when you take the period, let us take the period from Jan to, I think most of them had periods from Jan to March or Jan to May 2018 was the first tax period as such, right. So, in that case, effectively what would have happened is that when you take March of 2023, okay, the first period, it would have been time barred, right. Now, after the regulations was introduced, okay, the tax procedures law was introduced, there have been few of the clients who have got notices. Okay. Now, what did that do? What if that effectively did is that it kind of extended the statute of limitation by another 4 years, right. So, there have been cases where notices have been issued, some of them the audits have commenced, some of them the audits have not commenced, but what it has done is the statute of limitation has got extended by another 4 years. Similarly, in this particular tax procedures law, right, wherever there is the element of a voluntary disclosure, right, and if a voluntary disclosure is done in the 5th year, then also the statute of limitation gets extended by a further period of 1 year. Now, these are the changes that have been brought in terms of extending the statute of limitation. Okay, I will now talk about possibly some of them in terms of the year, what the changes are. Some of them may be, will elaborate in little more, and some other sections will cover through the executive regulations. Right. So, in terms of the documents now, I think this primarily the change which has happened is more also incorporating the corporate tax related requirements. Okay. So, you can see wordings like transfer pricing, you can see in terms of the elections, all these have now been basically added in terms of the record keeping part of it, right. So, you are expected to keep records of all such basically what you call transactions, all such elections related to transfer pricing, because like I said earlier, when you talk about the taxation procedures, it is one across whether you talk VAT, whether you talk corporate tax, or whether you talk of excise, right. So, these changes have been brought about in terms of the record keeping. Okay. In terms of the retention period, it still remains at 5 years, although that clause is still stating that if if in the VAT laws, if there is an higher retention period kind of required, then that will prevail over the tax procedures law, right. So, what we have seen is that the 5 years is there. Now, in context of real estate, they talk about 7 years, okay. But again there is also the requirement in the VAT law where you are expected to keep over a period of 15 years certain records as such. Yeah. So, that would basically prevail. Okay. So, voluntary disclosure also that you will have to extend, and where there is a legal representative, they will have to keep the record for a period of 1 year from the end of their representation. So, these are some of the new changes that have been brought as far as the record keeping is concerned. Yeah, sorry, one important point is that now we will have to take, I think there must be a confusion that when you talk about the corporate tax, it talks about is 7 years, right, as against this tax procedure law talking about 5 years. So, again going back to the same clarification, if there is a requirement in the law for a 7 years, then that would prevail over what is basically mentioned over here in terms of the 5 years. Again the tax registration, the requirements, see I think if in case of amendments, now you will see after the MRA tax portal, there is an emphasis in terms of the amendments, and I think where there are changes, okay, I think as a general kind of a caution or warning, try and see that any changes in trade licenses, and now they have added some more like email addresses and stuff, try and see that wherever the changes are there, they are basically done within the time frame specified. We have had instances of some of the clients being levied with a penalty, okay, of the, that is basically I think the 5,000 in terms of the intimations which go late, right, on the trade licenses and stuff. So, that is something that basically we would advise that you kind of keep your records updated with the FTA. Now, they added some more activities there, right, and also now with the licensing authorities, although earlier also it was specified that they need to share any kind of new license issuance. Now, even I think the renewals are something that basically that needs to be shared, and I think the FTA is now talking about in case of a deregistration, they could basically suo motu, means on their own kind of initiate the process of deregistration per se. So, this is the example where we are talking of the voluntary disclosure, right, where if there is no impact on the return. I think I mentioned about possibly 2 scenarios, right, where one is where you have the incorrect, basically you put the wrong emirate in the wrong emirate. So, that also if you are to do, you are expected to do a VD as per the law, right. In terms of 0 rating of transactions, also there might be other examples. In the law they talk of these 2 examples primarily, is the basically where there is a under the wrong emirate, or where the imported the services are there, because as we know the import, if you are allowed to take the RCM, right, in the box number 10, then in that case the impact is 0. But if there is any kind of it is not being reflected, it is supposed to be done under a voluntary disclosure. I think as far as the tax audit and procedures, these are primarily the time limits have been now specified 10 days. Okay, the documentation part of it within the 10 business days, the FTA is supposed to provide you the details. Earlier it was 20 business days. So, in all these are all easing the process in terms of in the response time from the FTA. This part is little kind of thing. Now, effectively when we talk about seizures, is the asset definition has been expanded to include even the intangible assets as such, right. So, that is something which has been done now. So, effectively you could have patents, brands, licenses, these also could be basically attached. I think these are more on the notifications from the FTA. They are encouraging the electronic media. So, if they are basically on from the portal, basically on the smart application or mobile text messages, these are all allowed as notifications by the FTA. I think this is the one which is significant, right. Earlier we were talking about primarily all documents. I think the wording was Arabic and it was giving an option of English. Okay. However, now that has been changed to say that it is Arabic or English. Okay. So, effectively you could maintain your documentation in English, right. It is only where the FTA would require, right, more in case I would say in case of litigation which goes into the court and stuff, right, that is where you would be expected to provide the documentation in Arabic. So, now that is a change that the word or has come about. Sorry. I think these are about the tax assessment. I will not get into the details of those. I think more important, let us talk about the national person. So, here the qualifications, there has been I think an expansion. Okay. It basically was referring to if you have got an accounting, law or finance degree, right, that was something which was there. Also the second part was there. What is new is that in case if you do not have a degree, but you take the professional qualification, then that the experience sphere has been increased from 5 years out of the preceding 8 years, that you need to be having the relevant experience. Now, we are going to see that as far as when the corporate tax comes in, as far as tax agents, there will be separate kind of qualifications for the VAT and the corporate tax, and even when as tax agents you would be expected to kind of pass those exams. So, specific it is your tax agency would be specific to what you are doing. So, you could I think you could be both a tax agent for corporate tax as well as VAT or indirect tax. I think this is the most important change, right. I think a lot of us might have not gone in for the tax agent ourselves because of the requirement of fluency in Arabic. Now, the word is used as Arabic or English. Okay. So, I would expect that with this change happening, we would see a lot of tax agents from the CA fraternity also joining as such. It does not sound exciting. Maybe we should have a round of applause for this particular thing at least. Right. And there is some technicality that which is also maybe some of you might be now becoming part of the tax dispute resolution committee, right, at least where they are saying that if you're part of the tax dispute resolution committee, then in that case you cannot be a tax agent. So I would say that good times are ahead. And obviously the normally what would be expected from a professional organization, continuing professional development, right, recognized bodies to provide the professional certification. And this is a bit where it could be where when you talk about juridical tax agent, right, which is actually a tax agency, they might come up with the requirements of how many tax agents would be required to be there within the tax agency. So this is a change which is likely. Right, and that's the one which I was talking about earlier. When you talk about the tax legal person tax agency, the other two conditions were there already, right. You need to have a trade license, you need to have the professional indemnity, but most importantly, the one of the conditions which has come about is that at least a partner or a director should be qualified as a tax agent. Now that's something like which is likely to come when you are talking about a tax agency. And these are related primarily to defaults as such, if you do not pay the fees. So these are very normal, right. The renewal period for a tax agent would be basically once in 3 years, as far as the tax agency, which is I think applicable now also, that for a tax agency on an annual basis. And the normal, whenever you are not fulfilling the criteria, so the delisting, whether it is adversely affecting the integrity of the system, serious violations, or you become a member of the TDRC. I think there is a new section which is introduced in terms of reconciliation and tax crimes. I will not get into the details of it, but primarily what it mentions is that before they take the legal proceedings, there is a framework in which basically they will talk about a reconciliation process, and it will require the entity to pay the taxes and possibly 50% of the administrative penalties to kind of initiate this reconciliation in the tax crimes as such. So I think I will describe this in only one word, it is called persistence. Okay. So we do face the same issues as such, right. One of the things is, at least recently, I think there was a phase when the Amara tax portal was kind of came in, and a lot of magic things happened in that portal, right. And some of them then when we went back, they were to say IT issues, right. It took some time for them to resolve it. But I think now what is happening is that now at least the time frames of response has been defined, okay, and there is a to do is that, okay, there is a time frame, whatever that is, right. During that time frame you can't really question, but when it gets beyond the time frame, there is something called an escalation request, okay. And what we have found is that those escalation requests, that kind of yields the result, but life is is a journey of patience and persistence.
Can you please answer this specific issue, which is just the portal, whatever we claim, it's appearing again. So can we go and request for the refund for this?
Yes, so it's again some of these have been the IT related issues, okay, and sometimes we have even got in touch with the FT IT cells on these ones, and that's how some of them have to be restored back, because this is the process of actually the migration of the system from the old portal to the new portal.
Yeah, I have a very basic question. Is there a format in which they tell you that you are under a tax audit, or is it because you've seen in a couple of instances where random information is asked, provide me this details for Jan 2018, one in 2021, one in 2019, and then there's dead silence 7 months hence. So what does that mean? Are you under audit? Are you just information? What is it?
So I will not steal the thunder from Ankur. He is going to talk in greater detail about tax audits, but there is a format, and generally wherever the tax audits are formally launched, they basically tell you that there is a tax audit which is going on. Sometimes there are some things where they are cross checking, okay, against somebody putting in a refund or those claims, they are doing a cross check. So, they tend to ask you specific information. So, but otherwise if it is a tax audit, then there is a formal request, there is a formal process of telling you that it is under the tax audit as such. But further elaborations will be done by Mr. Anpur.
Any other questions? We expect something more to come.
So, again like we said, if there are specific information, if it is an audit, then you will know that it is an audit as such, yeah, because there are people deputed, there is it's also said that who is the auditor, who is the supervisor for that audit. So, all that information would come, but if there are specific informations, like I said, sometimes there could be cross checks, of somebody submitting a refund claim and you could be asked the information because you are the other party. So, it could be related to that.
Or a summary of a particular day is good enough?
So, if you look at the logic there, I think when you report it, right, the tax invoices are individual invoices, right. Now, in fact, in this tax procedure law, right, they have basically said that originals you can keep it, or you have to keep the record in an electronic form which replicates the original. Okay. So, I understand the what you have in an issue, but I would advise that wherever there is a summary is only giving you a total as such, right. Even if you keep it in the electronic form, because I am sure all your when you look at the retail, there are POS machines, and the POS machines do have detailed recording, right, of all the transactions. If you are able to keep those in an electronic form, if and when you are asked, because they could ask you for a sample, yeah, because where you say that this is a summary of the month of, for example, for the month of January, right, what does it contain? So, if they were to ask you for a particular sample, I would imagine that is something that you might want to consider in your record keeping.
But considering the volume, is it practically possible to keep all the POS invoice?
No, I am saying in an electronic form. Today, I think as far as data is concerned, you can look at possibly keeping those in an electronic form. That is what I was referring to. It's always a pleasure to see you. Thank you. Thank you so much. Thank you. Great job.